Welcome, everyone. I'm Sidharth Malik. I work as the Chief Revenue Officer of Freshworks. So it is great to have so many of you from the startup ecosystem at this talk. It just shows how vibrant our ecosystem has become over the years. Most of you know Rajan already. I have known him from our days at Microsoft when he was my boss 10 years back. And it's a great opportunity for me to be on the other side of the table, because in Microsoft, he used to ask me questions about how is the growth happening for your division, Sidharth, and now it will be my turn to ask him how we are building the next 100 unicorns from India. He's now part of a leadership team at Sequoia Capital and focuses on developing search into the world's top scale-up program for startups by acting as an investment advisor and mentor to the program founders. Prior to Sequoia, Rajan was head of Google India as well as Southeast Asia, where Rajan played a key role in expanding the region's internet ecosystem while accelerating Google's innovation and growth. He's also a prolific angel investor who has backed a large number of successful startups at a very early stage. So welcome, Rajan, to this fireside chat, the next 100 unicorns from India.
Thank you, Sidharth, for having me, and good afternoon, everyone. It's great to see so many of you here today, and I'm super excited about against all odds, Freshworks' first startup summit. So thank you for inviting me, Sidharth.
Awesome. We are privileged to have you. So Rajan, we are going to have this as a fireside chat, and if anyone from the audience have a question, feel free to post it on our chat window, and we'll pick up some of them towards the end if time permits. So Rajan, about 5 years ago, when you were at Google, you predicted that India will have dozens of unicorns. And that came through. We have close to 24 unicorns now, including Freshworks. Now you're predicting that sometime close to 2025, we'll have 100 unicorns. And in your own words, this is just a trailer. The movie has just begun, and it is going to be a super duper hit. Knowing you, this is not a random prediction. How you're thinking about it?
Yeah, no, I think, it's very interesting, Sidharth. I think it must have been 2016 or so. India only had a few unicorns at the time. And I was, at Google, we used to do a lot of research on, internet trends and trying to sort of figure out what might happen over the next 4 or 5 years, and we were doing all this analysis, and my team, I think, had come up with, they were saying, look, between 15 and 18 or 19, right? So we actually, so in 2016, we said, look, by 2020, so we rounded it up and said, look, obviously we're never going to get it right, but maybe there'll be 20 unicorns. So I think that was probably the number. And actually the number, a current number, Sidharth, is 30. So India has 30 unicorns. And what is very, very special, or what most people actually, not special, but what most people don't think of is, in the year 2010, which was exactly a decade ago, India had a few thousand, had 0 unicorns and less than $1 billion of annual venture capital funding, right? But at the end of 2019, India had over 40,000 startups, 30 unicorns, and in 2019, India had got about $14.5 billion of venture capital funding, right? So it's been a huge change. And then even if you look at SaaS, we're very fortunate to have Freshworks, as an Indian startup that we are also incredibly proud of. But what a lot of people forget, Sidharth, and you won't forget because you were there, is that Freshworks became a unicorn about 2 years ago, right? Little less than, maybe little 2 years ago.
Right.
And so 2 years ago, India had 0 SaaS unicorns. I mean, it's a crazy thing, Then was Freshworks was the first. Then you had Druva, then you had iCertis and so on. And now we have 5 unicorns, right? Postman being the latest. So even in a space like SaaS, where if you had asked me 2 years ago, will India have 5 SaaS unicorns by 2020, I would have said, no, it will probably take a few more years, right? So everything is accelerating. Now, so that's sort of the background. I think to go to this question of why do we feel very strongly that we could get to 100 unicorns, right? I think it's because of several reasons. Firstly, look, we're already at over 500 million internet users in India, right? By 2025, India will get to 1 billion connected users, right? And that's going to happen. A combination of data will continue to be very cheap. Smartphones are going to get much more affordable. Jio has shown the way in terms of what you can do with a connected feature phone, etc. Right. So firstly, you need to have very highly affordable connectivity. You need to have affordable devices, and then you need to have local languages work and also things like voice interfaces work pretty well. Right. All those underlying things are sort of getting there. So that's the first reason. Right. The second reason is a lot of the digital infrastructure that you need to build companies quickly. Right. So if you want to build a consumer internet company, the most important thing is you need to have consumers online.
Right.
When I joined Google after I was fortunate to work with you, Sidharth, at Microsoft. I joined Google in 2011. India had just crossed 100 million users. Yeah. But what everybody forgets is there were only 10 million connected smartphone users in 2011. Right? Today we have 400 million plus daily active users on smartphones. Right? I mean, so this is enormous, right? You couldn't build an internet company in 2010 even if you tried, which is why companies that started around then grew very slowly. So that's the first thing. Secondly, you have things like payments, right? Everybody forgets 3 years ago, India had no digital payments. Today, we have 150 million Indians who actually, transact online every single month on digital payments, right? What enabled that again was UPI, with Aadhaar as an underlying infrastructure and so on and so forth. Third thing that has happened is, so one, our user base will double. We'll have 1 billion connected users. Secondly, a lot of the digital infrastructure that is critical to build digital businesses, especially consumer-facing businesses, which are things like payments, are already very well established, right? And the third thing is, as you know, our quality of entrepreneurs is getting much better. You had mentioned, I spend a lot of my time these days on Surge, which is Sequoia's seed stage program. And I must tell you, Sidharth, the quality of entrepreneurs that we are seeing today. Every year I've noticed, because I moved back to Asia in 2005, 15 years ago, right? I made my first angel investment in India. I was investing in the US as an angel, but in 2006. And every year I used to notice that the quality of Indian entrepreneurs got better. But what I can tell you now is it's on some exponential curve. Every year, the quality of entrepreneurs just keep getting better, right? Because then also now keep in mind, like for instance, Freshworks. I don't know how many startup founders you all have given birth to, but it's more than several dozen, right? SaaS startups have come out of people. So whether it's Freshworks, whether it's Flipkart, whether it's Paytm, whether it's Ola, whether it's Google, whether it's Facebook. So that's the third thing that's happening. And I think the fourth thing is, look, capital today is available, right? Last year we had $14.5 billion of venture capital funding. And this year, obviously, we had 2 months of, slow period, but, things that started picking up again. So when you look at all of that, and then you add on top of that, the fact that Indian startups can build India to the world businesses.
Right.
Right. Freshworks is a India to the world business, right? Most SaaS companies, not all, but most SaaS companies from India will be India to the world companies, right? All of a sudden you go from, India GDP, let's call it $3 trillion to US GDP over $20 trillion. All of a sudden you can 10x your market size by just focusing on, from India, you're selling to the US, you 10x your market size, right? Obviously you all have shown the way, companies like Juba and iCertis and others have shown the way. So that is an additional benefit that we have, not just a very large user base, etc. And we think because of that, you're going to see a lot more activity and companies being built very quickly. I don't know whether you know, but this there was a company in the news today, right, this morning, that Whitehead Junior was acquired for $300 million by Byju's. And what everybody doesn't remember is Whitehead Junior is all of like 2.5 years old.
Right.
So it used to be, you spend 15, 20 years to get to build a company. Today, it still takes, by the way, I mean, Freshworks is a great example. If you want to build an enduring, very large company, but you can get off the ground very quickly, you can start monetizing. So look, I mean, across all sectors, right, whether it's SaaS, whether it's EdTech, digital health, you don't have a single unicorn, right? I mean, you've seen what's happening with COVID, right? It's kind of activity we're now seeing in areas like telemedicine, fitness, so on and so forth. You can look at consumer internet gaming. Gaming, we only have one unicorn, right? Dream 11, right? I mean, in gaming, we're going to have a large number of unicorns. Why? Because 300 million Indians game online. 300 million, right? Out of 500 million Indians, 300 million game online. Now, the issue so far has been they don't pay for it. But as payments get in place, as micropayments become a reality, one of the things we've discovered is large gaming companies in India will get built on real money gaming, right? Companies like Dream 11, like MPL, and so on. So I think across every single segment of startups, right, whether it's SaaS, where you all obviously are leading the way, or whether it's EdTech, like people forget that Byju's today is the world's most valuable EdTech unicorn, right? There are 17 EdTech unicorns in the world. Byju's is the most valuable, EdTech unicorn in the world, right? There's no reason we're not going to have 10 EdTech unicorns by 2025. So So look, I'm very, very confident that by obviously this year will be a little slower because of COVID, right? Obviously, a lot of companies had zero revenue for 2 months, and then they've been set back by 3, 4, 5, 6 months. So I think it will be slower, but starting next year, things are going to pick up again, and we're going to see significant acceleration. So long answer to your question, but that's sort of how I frame the opportunity that we have ahead of us.
Awesome. No, thanks, Rajan, for sharing the opportunity landscape and then the skill getting better by the day from an entrepreneurship and the whole ecosystem trying to thrive. You just mentioned about COVID, and I just wanted to pick your brains on like when the pandemic hit us. I'll give example of Freshworks. At Freshworks, we just closed a round before the pandemic hit us, and that gives us a long runway. While we had money in the bank, we braced for the impact and looked at our business entirely from different lenses, right from employees, their health, and from a GTM strategy, revenue strategy. We planned for different scenarios actually in the last 3 to 4 months. And given that what we seem to be in a prolonged period of uncertainty as far as the COVID is concerned and thereby its impact on the economy, what's good way to think about business if you're in an early stage startup in these pandemic times, Rajan?
Yeah, so I think it's a great question, Sidharth. And Sequoia US team, right, was the first actually out of the gate. They published a memo, a blog rather, called Black Swan 2020, right, COVID-19, and that was actually early. I think it was either late February, I think it was first week of March, and then India shut down obviously third week of March, right. So I think 4 months ago we started talking about the most important thing if you're a startup or for that matter any kind of business is cash runway, right? Because even then we knew that COVID is not really a 1 or 2 or 3 month phenomenon, right? We are now 4 months into COVID. I think tomorrow, by the way, India is going to cross 2 million cases. Yeah. We're certainly going to get to 3, 4, 5 million cases, right? And as you know, we've seen this year in Chennai, cities will open up, cities will close down, they'll open up, and we'll see this open and shut scenario for a long time, right? So this is not a 2, 3, 4 month phenomenon. This is going to last for a long time. And second is, it's highly uncertain, right? So for instance, a lot of companies were celebrating because they were back in business, and then all of a sudden the city gets shut down, right? So you go back to sort of zero revenue, especially if you're a physical product type company. So I think the most important thing we talked about 4 months ago is cash runway. And I would still even say even today, make sure that you have enough cash to go for 18 months, right? So if you have cash that can take you through 18 months, then I think you're in a pretty safe place. Otherwise, you may not be in a safe place. So doing everything that you can to extend your cash runway. And I must say, one of the things that we at Sequoia have been incredibly impressed with is how quickly Indian entrepreneurs actually responded to the COVID-19 crisis, right? By restructuring their costs, by being much more thoughtful about every line item on their costs, right? And then not just going beyond that, right? Is actually focusing on their product, making their product much, much stronger, engaging their customers, changing their go-to-market channels, right? And then also, a lot of products, like for instance, a lot of DTC brands, right? Direct-to-consumer brands had to reconfigure their supply chains. E-commerce companies had to reconfigure their supply chains. So I would say number one is make sure you have, 18 months of runway. I mean, we were saying 24 months, but now we're, let's say through the end of 2021, if you have cash runway. And secondly, really use this as an opportunity to reimagine every aspect of your business, right? I can't tell you how many companies we have in our portfolio, Sidharth, that have actually gone from, some very difficult unit economics to now actually having pretty healthy unit economics, right? And I think we're seeing that, by the way, it's not 2, 3, 4, 5 companies, right? It's a large number of companies. Obviously, SaaS companies, if you're a well-run SaaS company, you've obviously had very high gross margins, good unit economics, good LTV to CAC. But in a lot of consumer spaces, right, there are a large number of companies that were not in a good place on unit economics. So they've actually gotten their unit economics to be much better. I mean, this is one of my angel investing companies. It's called InstaMojo in Bangalore, right? Sampath's been tweeting about what's happened to, their profitability. Their EBITDA went from negative 50% 4 months ago to positive 20% EBITDA, Sidharth, right? In 4 months. Can you imagine? And by the way, this is a business with many millions. Yeah, this is a business with many millions of dollars, millions of dollars of net revenue, right? I mean, how do you go from negative 50 EBITDA to positive 20 EBITDA in 4 months, right? By doing the basics. So I think it's been a very important time for Indian startups to go back to the basics, to do the hard things, right? Focus on your customers, make your products better, get your unit economics to work. So I'd say that's the other thing. So make sure your runway and improve the basics of your business.
Beautiful. So, Rajan, there was also a feeling, especially in the Indian startup community, that because of the COVID, the funding environment is also changing. Will we start seeing more conservative valuations now going forward? And knowing you as an investor in many companies, and you know this market very well, do you still feel that for a good idea, still there are fundings available? And how do you relate this both, given the time we are in?
No, I think it's a very important question, Sidharth. And I would say, 2 months ago, by the way, my answer would have been different, right? 2 months ago, my answer would have been, look, the funding environment is going to be very challenged for at least 6, 7, 8, 9 months. But what's actually happened is quite interesting. By the way, so I would say, March 20th or 23rd or something, right, is when lockdown was. So I would say, the month of April was very slow because everybody was adjusting to the new normal, right? Nobody knew how long this was going to last, etc. And then funding started opening up again in May, but I would say now June, July, things have really picked up. So today, I think there are 3 or 4 things to keep in mind, Sidharth. One, early stage activity, right? Whether it's seed stage, angel stage, whether it's at the surge stage, right, is $1 to $2 million checks, or whether it's Series A, $5, $7, $8 million checks. Activity is back, right? But I'll tell you, you have to be building a certain kind of company, right?
Right.
You can't be building any company, right? Maybe
Right.
that has changed because it used to be, if you had a good idea, you could probably get funding. That has changed, right? But seed stage activity, for instance, at Sequoia, across all stages, right? Seed, venture, growth, we are busier than we've ever been, right? So we are seeing actually lots of very interesting companies. So that's number one. Early stage funding, seed and venture, we are back to, being very active because, all of us have also gotten used to investing over Zoom, right?
Right.
Without building companies, how do you do diligence? How do you build comfort that these are founders that we want to partner with, etc.? I think the second thing that has happened is in several segments, the best companies, valuations have gone up, right? So EdTech, for instance, right? You just read about Whitehead Junior, you've read about the last round of Byju's, you're going to see the same thing in digital health. Actually, in SaaS, we're seeing that at least for SaaS companies, there are some SaaS companies that have accelerated to that, as you know, right? Remote work, collaboration, those kinds of companies, we've started seeing a significant uptick. So I would say in certain segments for market-leading companies or companies with very strong growth, if you can grow fast with good unit economics, despite COVID, right, you're actually a very special company today because you're probably in an industry that has a lot of tailwind and you've got, something that is working pretty well, right? So that's the second thing I would say. The third thing, though, that is very important is if your unit economics are terrible, you have zero chance of raising funding today, right? So I would say that what has really changed over the last 4 months, Sidharth, is, companies that had terrible unit economics but strong growth had the possibility of raising a round, right? And it obviously, I would say, since the failed WeWork IPO, which was Q4 of last year, right, that whole model started sort of unraveling, right, where it wasn't as sort of interesting to back a company that was losing money but growing very fast. But I would say with the onset of COVID, I mean, this idea of backing growth companies that are growing for the sake of growth with poor unit economics, that has completely ended.
Right.
Today, if you don't have positive unit economics, and by the way, there are a lot of companies that have no revenue, that's fine, right? Those are called distribution first companies. We can talk about it, right? You're building a large user base, be it on consumers or SMEs, and then over time you will monetize, right?
Yeah.
Those companies, if they have good retention, good user love, they will raise funding. But let's say you're in a revenue first business, right? Let's take e-commerce, or you've got some brand product or some product you're trying to sell. Let's say, there's a question on B2B e-commerce, right? But if you have deeply negative unit economics, you've got 3% gross margin, negative 1% CM1, and negative 4% CM2, no chance. The only people who will invest in your company are the people who are currently on your cap table. So you better figure out a way to get your current investors to step up because no new investor is going to come close to the company. So I'd say those are the 3 things. But I've been very pleasantly surprised, Sidharth, at how robust, how quickly the seed and venture stage, angel seed and venture stage investing markets have come back, right? So for instance, at Surge, we run a cohort program. We have 15 companies on our 3rd cohort. We just finished the formal programming. Our next cohort starts in November. We'll have 15 to 20 companies per cohort, right? We have already selected 11 companies, right? And these 11 have been selected largely through COVID.
Right.
These are all decisions that we've made through COVID, right? So think about it. I mean, and these are not like 100K checks, right? They're $1 to $2 million from Surge, and then we co-invest with others. So
Right.
I would say I've been very pleasantly surprised at how quickly it's come back. But if you're an entrepreneur, make sure that you're building a real company, right? And when I say real, what I mean by that is you've got viable unit economics.
Got it. So Rajan, just stretching this one step further, like there are some good startups. They are being in a distressed state because of the COVID, because the assumption they made at the beginning of the year no longer hold anymore. So based on that, they are good startup, but their assumptions are going wrong because of the COVID scenario. Do you foresee increasing consolidation in the market? What do I mean by that is, like you just gave an example about EdTech, where Baju acquired a big company. Would you see that consolidation more in these COVID times as well? Where maybe a decent-sized startup trying to acquire a smaller startup where their unit economics are not holding up, but they are a good product.
No, I do think, look, we will see a lot of startups, right? So, look, I gave the positive side of the thing, but the reality is India has 40,000 startups, right? But, more than 10,000 of those startups are pretty much either out of cash or going to run out of cash, right? And they don't have that 12, 18 months of runway. And when that happens, Sidharth, as you know, either you have enough revenue that you can pay your bills, right? You've got enough revenue with healthy margins where you can pay your bills, or you have to go out and raise capital, right? And now if you're in a sector where, it's difficult to raise capital for whatever set of reasons, then you really don't have much of an option, right? Either you find a strategic home for your company, and we're seeing a lot of that, right? We're seeing a lot of, actually, it's a great time for larger companies in India to do acqui-hires, because you can pick up some, you can actually onboard some terrific talent, right? So we're seeing that. And we're also seeing companies, actually just sort of saying, look, that was a great try, but we're going to, move on and, try to do something else, right? So even within our portfolio, at our seed portfolio, right, we've had some companies really one company, a very interesting company. The only thing is, because they had enough, they were in the international travel space. It's not announced yet, right? It's in our next, it's a cohort that's coming up. We had decided to partner with them, but then COVID hit, right? They had a very, very strong team. They were planning on doing something in international travel. COVID hit. They've completely pivoted. So maybe come December when we talk about our next cohort, I can talk about what this company is. But it's a really interesting story. So what I would say is, if you're a very early stage company and you're in a deeply impacted industry, right, like international travel, hospitality, offline retail, sectors like that, if you have enough runway, you should seriously thinking about a hard pivot, right? Because let's face it, international travel isn't coming back in the next 6 or 12 months, right? It's going to take quite a while for international travel to come back, and then even when it comes back, it's probably going to be slower than what most assumptions were. So I say that's what's happening, Sidharth. But that being said, like if you take EdTech as an example, that's a very vibrant sector now. On the one hand, you have a few companies that are being acquired, but the number of new startups is significantly higher than what it used to be. Every week, Sidharth, we meet between 5 and 10 tech companies that are super interesting, right? Super interesting, and they're doing things that are very, very different. Because remember, EdTech is a very, very large space, right? So far, a lot of the action has really been around K through 12 and test prep, right? But those are only two segments of what is a much larger universe. So on the one hand, you'll see consolidation, but on the other hand, you'll see a lot of net new startups. So, and I would say, look, if you're a startup founder, just ask yourself a few questions, right? One, do you have enough runway to go to end of 2021? If not, is there a way for you to create the runway, right? Either by becoming cash positive or by generating more revenue. Number two, can you raise funding? Are you in do you have the basics that are required to be able to raise a round today? And if you can't, let's say you only have 2 or 3 months of cash left in the bank, and you're not going to be able to get to profitability. And by the way, that's something I would really question, because I was amazed to see what Sampath did as Insumoto, right? Negative 50% EBITDA to positive 20% EBITDA. So I think anything can be done, right? But if you can't get to profitability and you don't think you can raise funding, then you should actually think about finding a home for your company, right? Because that's a smart thing, and especially if you're a very talented team, as you said yourself, Sidharth, there's a lot of interest today from companies of different sizes to really onboard, very good talent.
Right. Rajan, I'll pick one question from our audience. There's one question which says that what's the future of B2B e-commerce in India after COVID-19?
Yeah, I think the future of everything in India is very bright. Okay, because I think this is a very important point to keep in mind, because sometimes, we get into a major crisis like this, and now clearly this is a crisis we haven't seen in 100 years, right? And everybody sort of thinks, oh my God, the world's come to an end. Look, we will get beyond COVID. It will probably be, early, middle, maybe late next year, but we will be get over COVID, and India is going to go from a $3 trillion economy to a $5 trillion to a $10 trillion economy. User base is going to go from 500 million to a billion, right? So as you had said, I've said this before. This is the trailer, not the movie. So the movie is going to start, right? And by the way, the same thing applies to B2B e-commerce, right? B2B e-commerce largely, we are on a scale of 1:100. Everything that has been done so far is about a 5. 5 out of 100 has been done, right? We've had some very interesting companies like Udan and a few others that have come up. But quite frankly, this is a massive market, right? Just if you look at FMCG, you look at fashion, you look at electronics, you look at, industrial products, you can go through all kinds of verticals, right? There's so many verticals. I think what is important in B2B though is to make sure you're building the business thoughtfully. I think what has changed, going back to one of the points that I made, Sidharth, is a 3-4% gross margin business with -1% contribution, CM1 of -1% and CM2 of -5. That's a very hard company to build. So find a way again, right? How can you actually get to something that is a lot more viable? Because that kind of business is not viable. So what does that mean? If you're in the B2B segment, let's say that's got high double-digit, low double-digit gross margin, which is quite tough, but maybe there are some verticals where you can do that. You've got a CM1 of, let's call it 7 or 8, and you've got a CM2 of 3 or 4%. That gets to be quite interesting, right? Because especially if you're in a large space, then you've got a viable model that you can start scaling. So I would say B2B e-commerce is like many other sectors in India. It's largely untapped. There's a lot of potential. But how to build a business thoughtfully in B2B e-commerce, I think needs a lot more thought, right? Because I think, again, going back to, there are companies, Sidharth, that I call 2019 companies. So when I meet a startup, I'm asking myself, is this a 2019 company? A 2019 company is a company that grows at, growth at any cost. 2020 company is thoughtful growth with viable unit economics, right? And insane customer love. So I think so things have changed, right? From a how to build a company standpoint.
Well, that's very well said. No, Rajan, we have another couple of minutes, but I definitely would not let you go without asking the advice. Like, as an investor, especially someone who many others tag along with you, and what are the signals you look for before making an investment in an early stage company? And parallelly, I would also like to club my second question, and maybe there we'll end with that. What would you advise early stage founders at this point in time with respect to the leadership and the management also?
Yeah. So I think both are very good questions. So I think on the first question, look at Surge. We meet literally thousands of companies, right? And then we pick 15 to 20 companies per cohort. And Sidharth, thank you for coming and speaking at Surge. You were a huge hit with our cohort of founders. So we look for really two things, right? We look for amazing founders, and I'll talk a little bit more about that. Going after very large markets, right? We want to make sure that the problem that you're trying to solve, that market that you're in, is large enough where you can actually end up building a large company. And the third thing is, if the company has launched, so because we are Surge, we invest at seed stage, right? So we have a large number of companies that we would partner with before they've launched. But there are also companies that we partner with, meaning we invest with, that have already launched. And if you've launched, then we look for a certain set of things. So let me talk about each of these things, right? In terms of amazing founders, what are we looking for? I think we're looking for founder market fit. Some people found it founder product fit, right? What is the reason why this founding team is likely to win in this market, right? Actually, if you look at Girish, right, the co-founding team of Freshworks, I mean, they had a very strong reason to win, right? Because they came from Zoho. So they had product market fit, right? I mean, they didn't wake up one day doing EdTech and then say, I'm going to do SMB SaaS in the US, right? So I think this founder market fit is one thing we look for, right? The other thing we look for in founders, Sidharth, is this a team that can work together, right? So we try to understand, will this team stay together for 10, 15 years, right? Because at the end of the day, it takes 10, 15, 20 years to build a company. And so we're trying to understand, look, is this a team that we think has chemistry that might stay together? Third thing is resilience, right? They're looking for signs of resilience, right? Are there signs that, this is a team? Because keep in mind, every successful startup has 5 to 6 near-death moments. This is literally when you think you're finished, right? You've run out of money. You've got a big lawsuit, a competitor launch with 10x more funding that you have, your co-founder leaves, right? There are so many things that happen. I mean, you guys know this, and you know this, Sidharth, because you're an entrepreneur yourself, right? So we're looking for resilience, right? And the last thing we're looking for is, like, are they, missionary, right? Why are they trying to do what they're trying to do? A lot of people, not a lot, but many entrepreneurs we meet, it's not we can't figure out why are they doing what they're doing, right? So Sanjay Dikchandani has his favorite, saying, right? Saying your startup needs to be your life's work. It is what you're going to do for the next 20 years, right? 20 years is a really long time, by the way. Well, you and I know this because we've been around for it, right? But for one of our young founders, 20 years. Oh my God, yeah, 20 years. That's how long it takes to build an enduring company, right? So we're trying to understand: are they missionary, right? Is there a reason? Why are they really trying to do? So those are the things we look for, and I would say founder market fit is very, very important. The other thing, so that's one. On the market, look, it's very simple, right? Look, there are markets where you can build a large multi-billion-dollar company, and there are other markets that are just too small, right? So, and by the way, the problem that you're going to start with is always very focused. We're not saying have a problem that's very broad, but the market that you're playing, right, needs to be large enough. And then, if the company has already launched it out, then basically the most important thing that we're looking for is early signs of what we call customer love. Do customers love your product, right? If it's a consumer internet product, do they use it often? Do they rave about it? If it's a SaaS product, do they continue to use it? Do they renew it, right? Churn. In SMB SaaS, what's the number one thing that's a big red flag for us? Churn. SMB SaaS company, you got monthly churn of 5%, highly unlikely we're going to invest in that company. Why? Because there's no customer love. You're acquiring customers, but 60% of your revenue base is gone at the end of the year. Impossible to scale a company, right? You know this better than anybody else. So and the consumer internet apps, right? We look for things like retention. We look for, again, right, retention. If your 30-day retention is 2%, that means 98% of your customers who downloaded your app don't use it anymore. Right? There's no purpose of this app. Nobody cares about this product that you built. So I'd say if you've launched, that's what we look for, right? Then last thing, I think, coming to your question, for founders as leaders, look, I think all the entrepreneurs on the call, right? All of you became entrepreneurs because you have a mission, right? You have a reason to be doing what you're doing, and you're very purposeful. You also hopefully got into this knowing that it's very, very difficult, right? Look, being an entrepreneur is the hardest job in the world. There's no other job that's harder than being an entrepreneur, right? But what this period is, unfortunately or fortunately, going to teach you is how to lead in the hardest environment that we've seen in 100 years. So all I can tell you is, look, you are going through a very, very difficult time. The rest of the world is going through the same thing that you are. Every startup founder is very, very challenged, even if they don't tell you that they are, because look, it's very tough, right? Revenue is muted. Employees are worried about safety. You're working from home. Fundraising is tough. All these sorts of things. So what I would say is hang in there and keep in mind that this is why you became a founder, to do what nobody else can do, right? And what I can tell you is if you can make it through and emerge at the end of 2021, you as a leader will be 10x better. You're going to be 10x better. Your company is going to be 10x better. And your consumers are going to have more 10x love for you, because you're going to have to do what's really, really important from a product standpoint, from a team building standpoint, to be able to make it through the next 18 months.
Absolutely. No, Rajan, I've been told by our organizers that our time is up, but it's always a privilege to host you. And I'm very sure a lot of young entrepreneurs on this call will get to learn a lot from your wise words. So thank you once again, and look forward to see you soon.
Great. Thank you. Thank you very much, Sidharth, for having me. And thank you, Nivas, and all the best to all the founders on the call. Stay safe and stay healthy and keep building.